Nicolas Maduro has been removed from power following a U.S. operation, and this is one of the most important global economic events in years. Let's get straight to what matters for investors' oil business. Venezuela has the largest proven oil reserves in the world, roughly 300 billion barrels, but production collapsed from over 3 million barrels per day decades ago to just over 1 million barrels per day due to sanctions and mismanagement. And U.S. sanctions largely blocked Venezuelan oil from Western markets, forcing sales mainly to China at deep discounts. What changes now? With Maduro removed, markets are pricing in sanctions relief and Western re-entry into Venezuela's oil sector. In terms of the short-term impact, oil prices may stay volatile for days or weeks due to political uncertainty. Let's talk about the medium-term impact. If oil infrastructure remains intact and a transitional government cooperates with the United States, Venezuela could realistically add 700,000 to 1 million barrels per day over 12 to 24 months. This is bearish for oil prices. Why this matters? Extra supply hits a market already facing slowing demand growth. And this puts downward pressure on Brent and WTI, likely pushing oil into the 50s over time, not higher. And this directly weakens Russia's oil leverage, which is awesome. And this is one of the most underappreciated effects. Russian oil exports are heavily discounted due to sanctions and compete in the same heavy crude category as Venezuelan oil. China and India are key buyers of both. If Venezuelan oil re-enters global markets legally, it competes directly with Russian barrels in Asia, and Russia loses pricing power and volume. Now, lower global oil prices squeeze Moscow's cash flow, which matters geopolitically as it hurts Moscow's ability to fund the Ukraine war. In short, more Venezuelan oil equals less leverage for Russia. Now, who are the big winners? U.S. refiners and Western oil companies. U.S. Gulf Coast refiners are optimized for heavy crude and struggled after Venezuelan supply disappeared. So what changes now? Well, Venezuelan heavy oil is a perfect match for U.S. refiners. Refiners benefit from cheaper feedstock and wider margins. The likely winners are U.S. and European oil majors, oil field services companies, refiners, and fuel distributors. Now, this is not about stealing oil. It's about commercial access returning after years of sanctions. Capital and technology flow to where politics allow it. And China loses strategic ground in Latin America. China became Venezuela's main oil buyer and lender under Maduro. And many of those deals were oil for loans at steep discounts. So what changes now? Well, a US-aligned transitional government reduces China's privileged access. China will still trade with Venezuela, but it loses exclusivity, and it pays market prices. And its geopolitical footprint in the Western Hemisphere weakens. And this is a strategic loss for Beijing, not just an oil issue. Now let's talk about inflation and gas prices for consumers. If Venezuelan oil returns meaningfully, global oil supply increases and energy prices ease, and gasoline and diesel prices fall over time. And lower energy prices reduces inflation pressure across transportation, food, and manufacturing. And this gives central banks more flexibility and acts like a soft tax cut for consumers. Now, you're not going to see it overnight, but over months it matters. And everything I mentioned so far assumes no prolonged civil conflict. Now, if Venezuela destabilizes, then oil supply is delayed, prices stay elevated, and investment stalls. But early reports indicate oil infrastructure was not damaged, which is crucial. Now, the bottom line is, this is not just a political headline. Oil markets likely trend lower over time, and Russia's oil revenue gets hit. And the US and Western energy firms benefit, and China loses leverage. And consumers eventually see relief at the pump. Now, this is one of those rare moments where geopolitics, energy, and finance collide, and the effects will show up in portfolios, fuel prices, and global power balances throughout 2026. Now, God willing, this remains a peaceful transition. Please type in the comments your thoughts. Thank you.